All right. Well, let me begin by welcoming our audience to this forum. My name is Praveen Krishna. I'm professor of economics here at Johns Hopkins University, and we are meeting under the obviously dramatic circumstances of a global pandemic, with over 1 million infected, and which has already taken over 50,000 lives. So tragic circumstances. Now, Europe was characterized 2 weeks ago as the epicenter of this pandemic by the head of the WHO. And in Europe, two nations in particular, Italy and Spain, have seen tragically large numbers of infections and death tolls exceeding 10,000 each, closer to 25,000 taken together. So this is a crisis. This is a crisis that, in addition to the obvious human toll, will also have significant economic implications. This combination of a shock to the supply side of the economy as well as a shock to demand will undoubtedly prove exceedingly challenging for governments to manage in the months and the years coming up. To help us understand the European response, the economic policy response to this crisis, we have with us two experts on European economics and European political economy. We have Dr. Antonio Garcia Pascual, visiting scholar in the International Economics Program at Johns Hopkins. Antonio has been with us since the fall of 2019, having come to us with decades of experience in international economics and on Europe at the International Monetary Fund and Barclays Bank. We also have Professor Matthias Matthijs in the International Political Economy and European Studies programs at SAIS, who is an expert on the political economy of European integration, and most recently, the co-editor of The Future of the Euro, published by Oxford University Press. So let me welcome our panelists, our speakers, and let me begin with you, Antonio. As I just kind of mentioned, obviously there's a pandemic that is global in its scope and has hit Europe very hard. And within Europe, there's, however, some heterogeneity, some difference in the way and magnitude and the intensity with which different countries have been hit. What we're seeing a bit is discussion in the press and the media about the need for specific countries like Spain and Italy, that they need help from the rest of Europe. And so I thought I'd start with that and ask you if you could explain to our audience, why is it that it's these countries that are going to need more in terms of kind of economic, financial help from the rest of Europe? What is the debate about? What are the disagreements about? And is there any kind of substantial difference in point of view between Germany, Netherlands, and kind of other Northern European countries on the one side, and kind of the so-called Southern countries, Italy and Spain on the other? Over to you.
Thanks, Praveen. Welcome to our audience. Indeed, I mean, Europe has been at the epicenter of the pandemic, and Italy and Spain seem to be the hardest hit within Europe. You mentioned the numbers; they are terrible, but the economic numbers are no less terrible. When you look at the type of economies that this pandemic is hitting, these are services-based economies. These are economies where, for example, tourism is critical, right? We're talking about 15% of GDP, thereabouts, both of them. And as you can imagine, it's not just the months in which activity will not be going on, but also the damage that you will cause going forward. I mean, I'm not sure how many will hop on a plane and travel to Italy and Spain over this summer or even coming winter. So this is very material. We estimate that the impact on economic activity, the contraction on GDP could easily be double digit. Okay, this is unprecedented, so sudden, so severe, the shock. Now, why is hitting particularly severely Italy and Spain? It's also fair to say that the countries had pre-existing vulnerabilities. Okay, and you saw how the markets immediately reacted. The spreads, the perception of risks of Italian assets and Spanish assets, as characterized by how much the asset value dropped, was very sudden and very severe, and triggered the action of the ECB. If you look at how much was the cost of financing for the sovereign in Italy versus Germany, it became very dramatic. From 2 percentage points to 4. In a matter of days. So the market knew there were persistent vulnerabilities, in addition to the fact that the pandemic was more severe there. those vulnerabilities are important because it's about the issue that you asked, the issue of financing. They had large amounts of public debt. In both cases, Italy higher. We're talking about 136% of debt to GDP, Spain nearly 100. High deficits, okay? In the case of Spain, very high. In the case of Italy, high as well, because having such a large debt means that they pay a lot in interest already, okay? So Italy has been having to do more fiscal effort. And third, there were persistent vulnerabilities in the banking sector, still from the previous crisis. So the cleaning up of the balance sheets and strengthening the capital had been done in Spain because they had a program in the past, a European sort of funds to support the cleanup of the banks, but in Italy it wasn't. So the crisis is severe and is hitting at the time in which these two countries are still vulnerable. Now, that's, I think, the first point, and it's important to be made. And that explains why the South will need more help in this. And it will need help to finance the fight. There are two fights here. There is the fight today to provide for medical, to provide for people that are out of jobs, to provide for firms. And there will be the recovery coming later. So I think we're in stage one, and there is a sudden need in financing to meet all of these needs, which are now. And therefore, whatever solution that we come up with, Europeans will come up with, has to be a solution that provides funds now. The emergency is now, for the next weeks, for the next months. So with that in mind, the type of instruments that work has to be instruments that are practical, instruments that are speedy, instruments that are readily available. And there are not that many European instruments that meet those needs. And that's what the debate is about, is how to finance the fight against COVID. The instrument that was built for that during the sovereign debt crisis was the European Stability Mechanism. But it comes with strings attached. There were loans, cheap loans, long-term loans, but against conditionality, macroeconomic and structural reforms. But yes, go ahead.
No, sorry, I was going to say, just in the last week, you've written a piece with a specific, with some co-authors, with some specific proposals about how one might use the ESM, the mechanism, to address these issues. And so, given the fact that we're aware that there's, as you've just explained to the audience, just mentioned that there's conditionalities attached in the structure, the way that the ESM is actually structured or designed, could you tell us specifically about what it is that you're proposing, how you plan to get around some of these issues that you've just mentioned about conditionality? Will this be acceptable to the countries that are potentially the recipients of these funds and so forth? So what is it that is new in the proposal that you laid out as of last week, and that's gotten substantial attention in the press?
Absolutely. The debate has been, well, because this is a pan-European shock, a symmetric shock that is hitting everybody, let's come up with a European solution, okay? Some countries in the South, including Italy and Spain, have asked for resharing, mutualization, transfers. And part of that was the proposal of the Corona bonds. And that is great. That is great if transfer happens, if solidarity happens. But what is important is time. Time here is of the essence. So you need financing now, and you need instruments that work. And that's where our proposal comes in. We think that if you come up with an ESM sizable loan without conditionality, ideally, and at low interest rates, sufficiently low, and not unrealistic. I mean, these type of low interest rates were used in the past, okay? So nothing more, nothing less. And long maturities, this will be, together with the European Central Bank, supporting these endeavors, will work, will be enough. What do we mean by that? Will actually make public debt sustainable over the long term. We can talk later what that sustainability means, but it's fiscally manageable, will make debt sustainable, and will provide the financing needs that Italy and Spain cannot meet on their own. It will be simply too much for the treasuries to issue so much debt.
So let me then just capture the idea, which is you're essentially saying, let's use the ESM through which the essentially Italy and Spain can borrow at a cost that is just a little bit above what it might cost the ESM to raise those funds in the first place, so very small premiums,
Exactly.
and which would be lower in principle or substantially lower than the cost at which they might be able to borrow themselves on the open markets if they went out and attempted to borrow. And let's do this in a speedy manner, and let's do this without conditionality, because that's going to be problematic, especially under the circumstances, right? That's kind of the broad outline of
exactly right. Just one technicality, and you already mentioned it. The ESM, because it has the guarantees of the entire European Union and the backing of highly rated and financially strong countries, is a highly rated institution. What does it mean? It's a AAA institution. So when the ESM goes and gets funds in the market, it gets funds at interest rates which are very close to Germany's. And remember, for the audience, interest rates in Germany are negative or zero. You can imagine if the ESM pass on those interest rates to member states at zero negative, that the fiscal accounts are up versus paying 2 or 3% interest rates. It makes a world of a difference. So that's precisely right, what you said.
Excellent. And let me turn to Matthias and ask, Matthias, let me ask you the following question, which is, we've just heard from Antonio about a specific type of proposal involving the ESM and, broadly what that might entail. But alongside that, we've also read in the press, things about something called a Eurobond, something called the Corona bond, some proposals beyond that, the details of which I haven't even gotten into, about, involving the ECB and various other forms of guarantees and so forth. So let me first, ask you this. How do you see, what are the differences for our audience first? What are the differences between Eurobonds, Corona bonds, and the ESM? And then maybe you could sort of, once we get those kind of definitional things out of the way, what is your view on how you see Eurobonds, Corona bonds relative to the ESM proposal that Antonio's outlined for us?
Yeah, thanks very much, Praveen, for moderating, and to Antonio for getting us off to a great start, and of course to the audience joining. So I want to reiterate the point, first and foremost, that we literally have 3 countries right now, Spain, Italy, and France, and they count for half the coronavirus death so far, right? So if you add them up, you get to 28,000 people, 27,000 people that have died. There's about 55,000 globally that have died. So it's not surprising that any kind of effort for more solidarity within the European Union is led by the French President Macron, the Spanish Prime Minister Sanchez, and of course the Italian Prime Minister Giuseppe Conte. So, and that's, of course, comes at the heels of a kind of, long-lasting Euro crisis where a lot of instruments were created, but where there was a feeling, especially in Italy and Spain, that there wasn't enough solidarity, especially not from the north, that seems to be having a better corona crisis, frankly, right? And has, much more fiscal room for maneuver. It also is worth noting that, when it comes to fiscal activism, the German government has been very active, but it's mostly fiscal stimulus for Germany, right? And so that it's kind of to offset their export markets that they've lost. So I think the main program so far that has kind of stopped the bleeding for Italy and Spain so far is what's referred to as PEP, P-E-P-P. So I believe, let me check my notes, it's the Pandemic Emergency Purchase Program of the European Central Bank, right? And the way I like to think about this is basically OMT, but without an ESM program, right? So OMT, outright monetary transaction, was the ECB program that was rolled out by Mario Draghi in September 2012 after his famous "we'll do whatever it takes to save the euro, to safeguard the euro" pledge. But it's never been tested because it was always the idea that the ECB could buy unlimited amounts of bonds of Greece or Italy, of any country, as long as it was in an ESM program, which came with strict conditionality. So Antonio is absolutely right. The ECB, of course, is temporary, right? So it's for as long as, it seems to me, as long as the pandemic lasts. But it also is still at various interest rates, right? So, of course, the spreads between Italy and Spain and Germany, on the other hand, have come down, but it's still, they borrow at significantly higher interest rates, right? So that's where a lot of people are saying, especially in Northern Europe, the Netherlands and Germany, listen, the ECB has solved this problem, right? PEP basically buys these countries' bonds and we can continue as we did before, to which, of course, Southern Europeans say, wait, hang on a minute. The last thing we need right now is, as we have a GDP collapsing with very high debt ratios, especially in the case of Italy, less so in Spain, the last thing we need is take on a hell of a lot more debt that we can finance at relatively low interest rates, but we may have to roll over that debt at much higher interest rates, right? So what Antonio is proposing, the ESM bit, of course, the big political obstacle will be the conditionality part, and the Dutch and the Germans have hinted that they want to see some conditionality, even though if it's symbolic. The hard part, of course, is that someone like Giuseppe Conte has already said if he goes back to Rome, to the parliament, and asks for support on this, and there's any conditions, he won't. This is the death of his government. This is a government that initially came to power as a kind of populist government that was very much railing against any conditionality when it came to fiscal policies from the Europeans, right? So then that's why the Southern Europeans, plus France, plus Belgium, plus Ireland, are arguing for Eurobonds, or you can call them, I mean, Corona bonds, Eurobonds, it's just a semantic difference. The idea is that a Corona bond would be beyond the ESM, a jointly issued bond that money would be used, be raised on the market, just like the ESM could, probably at similar interest rates, but that there would be this kind of implicit solidarity there, that these are the bonds that are backed by all countries, right? And that countries, that basically, the idea there is that you could have a perpetual bond, let's say, one that never has to be rolled over, right? That is there forever, just has to pay out a small coupon. And that would be like a great signal, the Southern Europeans argue, from Northern Europe, that they're committed to this solidarity. Of course, I think Antonio rightly points out, this is not going to happen overnight, right? I mean, they have to agree on how this would work. Is this then just to fight the public health crisis? Is it also for the fiscal fallout, to help the tourism sector, the airlines? I mean, it becomes endless. And so that's where Northern Europe is very much worried that they would go down this rabbit hole. And so that's where the debate now is, right? And the Eurobond proposal, that goes back to 2009, 2010, where a lot of people, myself included, Eric Jones in Bologna was one of the first to kind of put a formal proposal on paper to say, well, listen, I mean, this is the kind of treasury bill that the Eurozone would need to complete its currency union, because it would be in a very attractive financial instrument for the rest of the world to buy.
Excellent. So let me actually come back to the kind of the narrower economics questions, come back to Antonio, and then I want to certainly return to institutional features of the EU and the political feasibility of these different mechanisms and the ESM proposal that you mentioned, Antonio, in particular. So, but let me first ask you this. When you described the ESM proposal, you mentioned that in addition to the fact, if I understood you correctly, in addition to the fact that essentially raising funds through the ESM would allow countries like Italy and Spain to borrow at relatively low interest rates, that somehow the kind of the proposal that you had in mind would help to keep this debt sustainable, right, in the longer run. So is it going to be sustainable merely because it's low interest rate borrowing, or is there something else that you had in mind that keeps this somehow sustainable? Yes. Could you explain that debt sustainability part of this in terms of kind of the longer term consequences of the borrowing?
That goes to the heart of the issue and to what Matthias referred before on sort of something that can work on the long term, not just immediately. So look, when you look at sustainability of public debt, I think you generally, it depends of issues related to what is your long-term growth prospects. Depends on issues, what it will be the fiscal effort that you actually can realistically make. And obviously with the starting amount of public debt that you have today. Those are kind of some of the key parameters. And the sort of cornerstone, the interest rates, okay, which is where the ESM in part comes in. So what we did in this note that you referred to, and we've done a similar work for Italy, by the way, is let's calibrate. Let's go to the numbers. Let's take the ESM loan, fit a loan of, let's say, an average maturity of what they used in the past, around 12 years. Let's take an interest rate of the ESM today and going forward, we can take that from the markets because the ESM is AAA. So we can extract from the markets a futures rate curve where the bond is, the German bond, and from that you can build the ESM. So with these two pieces of information, and we know the entire stock of debt that we have today. So we just need to fit in a size of a program and sort of an average maturity of those loans. And we have all the pieces of the puzzle. So what we find out when we do that exercise for Italy and Spain is that with a sufficiently large program, and we're talking about a program, perhaps, maybe I shouldn't use the word program, I should use the word a loan, okay? This is sort of a COVID loan. This is not a program. This is not meant to be if there is no conditionality. So with a sufficiently large loan, which is around in the neighborhood of around 100 billion, okay? With interest rates where the ESM pass on its own interest rate at just 10 basis points spread, this is 0.1%, to be clear, on top to cover costs. And with 12-year maturity and a grace period of 5, these are financial details here, but important. This is like a small print when you go to a bank and take a loan, okay? This small print is critical, okay? So, and those characteristics are not unrealistic. They've been granted before. You can show 3 things. First, that debt to GDP can go on a downward sloping path, okay? Yes, it jumps up because you need to fight the pandemic, so you need to issue more debt. It jumps up, but it comes down over the medium term, okay? First point. Second point, the fiscal effort that you need to make the debt sustainable, it refers to sort of the primary balance, that is the fiscal balance ex interest payments, okay? Revenue minus expenditure. The fiscal effort that you need to make to put debt to GDP on a downward path is not higher than the pre-shock fiscal effort. The fiscal effort per year, that's the second metric. And we show that this type of loan passed this test. So reasonable fiscal effort, debt to GDP on a downward path, and the financing needs are adequate. That is how much the Italian Tesoro or the Spanish Tesoro, the Treasury, need to issue per year. It has to be a manageable amount. You cannot, go to the market with unrealistic amounts every week and expect that the market buys it, okay? So what we show is that with this kind of program, the financing needs per year, what the Tesoro has to issue in terms of debt, it goes back to a level which is very close to the pre-shock coronavirus. These are 3 critical tests, and if you design a program with the characteristics that I mentioned before in terms of interest rate maturity, it works. Debt sustainability is reinforced, is backstop, and that is a good signal for the markets. Okay, that is a good signal for the markets. We can debate also. Yeah. We can debate later also, if you want, whether the ESM bonds may or may not have already some of the Eurobonds characteristics, right? Because it sounds like magic, right? All of a sudden, the ESM comes in, and boom, the dynamics work with the right financials, with the right characteristics of the loan.
So that's great, Antonio. I mean, so essentially, I'm taking away that you've used this as a more speedy mechanism. That this is on a financial side, keeps the cost of borrowing as low as possible, and that it acts in a manner that one can work out with some kind of debt kind of sustainability calculations, but it does not overburden the countries and in fact keeps the debt loads kind of manageable. Sorry, go on.
There's one more thing that I forgot, and Matthias made a very good point about that, is that brings even more action from the ECB. Once some of these facilities open the door to what Matthias referred before, the OMT. So in addition, the ECB launches additional asset purchases under the OMT. And those can be aggressive. It's only on the front end, 1 to 3 years, but it's noticeable. Sorry to interrupt, but that's an important point.
But could I just press you for a clarification on that? So what is the difference then? You mentioned this towards the end. What is the difference between then the Euro bonds and the cost of all of that relative to this particular mechanism? Why are these two things different?
Look, in my mind, really, if you issue substantial amount of ESM debt, because the ESM is this European institution backed by European, backed by a large amount of capital committed, including by AAA countries like Germany, 700 of capital, of which the ESM can lend 500 billion, okay? And that's where the ESM gets its AAA rating and the low financing, okay? In a way, this is sort of the guarantee comes through this backstop. So what happens if Italy and Spain in the future cannot pay back to the ESM? The other countries that have signed the guarantee have to meet that. So the mutualization and guarantee come through that.
And that's what lowers the cost of borrowing.
Absolutely. And it's not the same as a transfer, right? In which you actually, one country provides a transfers today, therefore doesn't go into debt. But the guarantee is there, and it's joint and it's several, and it brings the funding cost down. So in reality, Praveen, it's not very different, the ESM bonds from Eurobonds, right? In terms of what it brings for the states. The big difference is they are there already, and you can use them now. Now, it'll be great if you go forward with Corona bonds and provide some further transfers, but that will take time, and hopefully it gets done.
Excellent. Let me turn to Matthias and ask you, there's some news as of last night and this morning that the European finance ministers might actually are in fact in consultations, negotiations to maybe put something together of the form that Antonio was describing, the ESM, possibly with sort of low levels of conditionality. It's yet unclear, at least from public sort of commentary, what that structure might look like. Let me ask you, I mean, do you see this kind of source of funding with low conditionality as politically feasible? Will the countries that will ultimately have to back all of this, Germany and others, support such a mechanism? How do you see this playing out?
Yeah, it's a good question, because there's a real fight going on in the north over this, especially within the kind of coalition governments led by Angela Merkel in Germany, and coalition government that only has one seat majority in the Netherlands, that's led by Prime Minister Rutte in The Hague. I have a hard time seeing right now that there will be ESM style loans with zero conditionality, right? I mean, it just doesn't go down well in these countries, even though right now, right? So that one thing I will want to come back to, Praveen, is the difference between Euro bonds or Corona bonds and the mechanism Antonio is describing is that, of course, the mechanism Antonio is describing is for this crisis specifically, right? So it's for a long time, right? 5, 10, 15 years even. But the appeal to European integrationists of Eurobonds is that they could be permanent, right? It's a kind of think of a big chunk of countries' debts, let's say up to 60% of GDP or something like this, in new debt could be issued as Eurobonds. And they would kind of permanently made it easier for the crisis-ridden countries to finance their own new debt in the future, right? I mean, you wouldn't completely mutualize legacy debt. I mean, this is not like saying, okay, the Italians are going to take all the debt they have, make it into Euro debt, and then the Germans are going to pay for it. I mean, that's how this stuff gets spinned in the German tabloids and so on. That's what Germany and other northern countries are so worried about. Also, remember that the European Central Bank has this mechanism, and there's often talk about the capital key, right? They have to buy debt based on the size of the countries within the Eurozone. So that's roughly 30% of all debt they buy has to be German debt. And there's very little German debt. So everybody's very happy of German fiscal stimulus right now, because that's actually enabling, there's a lot more new German debt coming out there that the ECB can buy. But they can, again, only do this temporary. They can go off the key. The question, that's the real question for the ECB. How long can they do this temporary? And so what Antonio was referring to, that's my second clarification point. When it comes to OMT, the moment if these countries would have an ESM loan and a program, they wouldn't have to call it a program, and it would have to be very low conditionality. But then actually the ECB through OMT can buy unlimited amounts of Italian debt, or unlimited amounts of Greek debt, unlimited amounts of Spanish debt. And that's, I mean, that is a real bazooka, right? Because then markets will immediately be like, well, you know, I'm not gonna bet against this debt because the ECB is gonna buy it in such dramatic ways. I mean, it's like PIMCO announcing they're buying certain bonds, right? Everybody will buy them too because the price will go up. So these things are now key. To me, the real drama is that the countries, Spain and Italy, that are the worst hit are also the ones that had, the kind of biggest structural reforms and austerity over the last 10 years. So, I mean, there's been books written, and there's even a book written about austerity kills by a public health expert that says, what austerity does, it really weakens public health systems. Nobody was too worried about it in 2015, 2016 when these books came out. But now you see, right? I mean, they just don't have the capacity to deal. So I think there's also other ways that Europe can show solidarity to fight this crisis when it comes to, transferring patients and so on. I mean, Germany has close to 80,000 cases, but they only have about 1,000 dead, which is kind of astonishing, right? That how low the rate is. So maybe they have the capacity. But to come back to the subject of today, on Antonio's points, they need fiscal help, right? And I think there's a kind of complete disconnect where in Southern Europe, they feel they want a Marshall Plan. They want grants. They don't want loans. They don't want to go further into debt. They don't want to pay anything back, even at very low interest rates over a very long time. They feel like this happened to all of us. We suffered the most. We actually need direct solidarity from Northern Europe. Well, Northern Europe is like, well, hang on a minute. I mean, like this is hitting all of us. We're all at capacity. You guys haven't done your fiscal homework. We have. And it's very clear in Germany and the Netherlands. They're saying, listen, we have been doing austerity and structural reforms, and now we have the fiscal space. You guys don't, because you haven't. So that narrative, the Northern saints and Southern sinners narrative, is incredibly strong in the popular imagination. And that's why I think there's these symbolic initiatives. That's why I think this is a kind of existential moment for Europe, because people are dying, right? This is not about people seeing their wages cut by 15% or losing their jobs. It's people's grandparents mostly dying because there is not enough kind of fiscal firepower to fight this crisis. Let me end there.
Well, let me just one final question to you before we turn this over to the audience. But let me ask you, so in this climate where, you're against this backdrop of Northern saints and Southern sinners, as you put it, where this is kind of, this is the kind of the psychological frame that several people, that many might see this have seen this through historically. Do you think there's some kind of a political dance that's possible under the current circumstances, which permits loans, some combination of loans or grants to be given to Italy and Spain, with kind of the fig leaf conditionality that allows them to say, yes, we have conditionality. This is not just money that we're throwing on these countries, and at the same time, the recipients are able to see that kind of ultra modest conditionality as something that they can swallow.
Yeah, I think what Antonio's suggested is probably the most likely landing zone that the ECOFIN and the Eurogroup so the finance ministers will come up with, right? It will have to be sold in different audiences differently, right? You'd have to say in the North, this is an ESM program. We have these instruments. There is still conditionality. This is not Germany paying for, Italian pensions and, Spanish holidays. This really is just a guarantee we're given, and there is certain conditionality. In the South, they will have to say, listen, this is basically quasi-free money we're getting thanks to the support of all the European countries. And I think that's where we'll land. I mean, usually it's not a very cool thing to say in the European Union context, but there usually is some sort of fudge that makes everybody kind of declare victory, right? But I think this is a very tricky moment for Europe, right? Because there are populist parties in Italy and Spain, and remember, they're also in government, right? Podemos is a member of the government. These are the party that started to exist because they railed against austerity and they railed against European conditionality. They are now part of Sanchez, the social democratic government. And don't forget the Five-Star Movement is still very much in power in Italy. They're also a Eurosceptic party. It's going to be very hard for them to sell this to their own people if it doesn't seem that this is a quasi-unconditional commitment.
Excellent. So it's a very complicated political economy there, and complicated economics is there as well to kind of contend with. We're now turning this over to the audience. So to our audience, the kind of members of the audience, let me just say that there are two ways in which you can communicate your questions to us. There's, and I'm somewhat new to this technology as well, so I hope I'm communicating this correctly. But there is a Q&A button at the bottom of your screens through which you can send us questions. And I see one question there already, which I'm about to read out in a minute. And alongside that, there's also kind of the traditional chat function on Zoom that I imagine several of you are now familiar with, so you can send questions through the kind of the chat room as well. And we have some questions that were sent in earlier prior to this kind of webinar beginning. So let me start with the question that was submitted through the Q&A platform. I invite all of you to submit questions through this as well. But let me start with the first one. This is from Patricia. And let me read this out. So, will the pandemic change the traditional German stance on austerity and spending? How can one argue that it is ultimately in Germany's interest to spend money on Europe's south? What economic tools should be used now so that the pandemic is a success scenario for the EU and for European solidarity? So it's really three questions wrapped into one. How does one change Germany's stance? And I suppose it's a corollary question. How can one argue that it's actually in Germany's interest to spend money on Europe's south? And then more narrowly, what economic tools could be used? And I suppose that was mostly the content of this meeting, so that we convert this into kind of a success scenario for European solidarity, okay? For the EU and for European solidarity. So let me throw it back to you guys. I mean, maybe both of you would like to take a crack at this. Antonio, do you want to start?
Sure. This is a great question, by the way. It is true that the sort of the black zero tough line of Germany against large deficits. In fact, they've been running big surpluses, bringing their own debt below 60% of GDP. Compare that to Italy, more than double Spain's. So this pandemic has changed that dramatically. If you look at the size of the German program to support the economy, is massive by any metric. Now, your question is still, Patricia, still pertinent, because will this be just a one-off, or will Germany rethink their stance, the fiscal stance going forward? I think I wish I had the answer. We'll have to sit and see. But the initial reaction is being huge, right? And so they certainly using the fiscal space. And from what we hear in the press, I think they seem to be willing to reduce that conditionality to also support the southern countries in need. That is sort of the sense that we're getting from the press. Now, you also mentioned what to do so there's not a complete breakdown in the European Union. That is critical, right? If you push these countries over the edge, and I think Matthias probably surely want to add to that, and feed the populists, then you go to the wrong equilibrium, in which the issue of Brexit comes back to the table, and the costs of that are far, far higher than having been showing a little more solidarity. So I think that hopefully that lesson sinks in, and I think they're in the process of doing that. So in addition to this ESM, there are initiatives through the European Investment Bank to provide backstops for some of the loans and guarantees, sizable ones. There is a program now on the table for unemployment reinsurance, and the European Commission announced 100 billion program. Let's see how they finance that. We don't know yet. So it's not just the financing, but it will come, it seems like, through the European Investment Bank to help some, including small businesses. It will come also through the labor support, reinsurance, and it will come hopefully through the issue that we discussed here today, cheap financing that makes fiscal affordable in the South so they don't have a complete meltdown.
But yes, your take on the issues of kind of the German stance, and what would you see as a kind of a possible channel here, or kind of set of outcomes here that will increase European solidarity, where by the end of all of this we see this as some kind of a successful outcome?
Yeah, of course. I mean, there is a big debate within political science whether politicians are preference accommodators or preference shapers. I mean, obviously the answer is they do both, right? But Angela Merkel and her CDU-led governments for 15 years have kind of shaped the narrative into, you know, low debt, and of course, as often is pointed out, right, the word for debt in German is also Schuld. It means guilt, right? There's something kind of there's a negative connotation, and then add to that the Protestant ethic and so on, and it's very hard to kind of change this narrative, and also very quickly this gets wrapped into a discussion of a transfer union where, of course, the Germans have a legacy with Eastern Germany after reunification, where there was a lot of West German money that was poured into Eastern Germany, and not necessarily with, you know, all that great results, right? I mean, Helmut Kohl at the time promised blumenden Landschaften, blooming landscapes, and they never really materialized. Eastern Germany is still the country where the kind of extreme right, the AfD, and the extreme left, the Linke, are very, very strong politically, right? So Germany has seen this, what this done, and they're very skeptical that this kind of fiscal solidarity with Southern Europe can work. That being said, I mean, there does seem to be a bit of a schism in the government in the end that the SPD, the Social Democrats, who seem to be fighting against the Greens for who controls the left in Germany, are now shifting slowly towards more solidarity with the rest of Europe, while the CDU of Merkel is keeping their line. So I don't know. There's an election coming up, which is scheduled for September next year. It's been striking that in the last 3 elections, this has been a very small issue in Europe, right? I mean, I would think this time it's going to be a much bigger issue because, of course, this pandemic spreads all over, right? And so they're kind of all in this together. But I think Antonio is absolutely right. I think there's a negative and there's a kind of fear, and there's also a kind of carrot story there, right? To convince Northern Europe that more fiscal integration would be a good thing. The fear scenario is if you send the Italian prime minister back with a harsh program, or at least some conditionality, and this leads to Matteo Salvini and the Lega coming to power and saying, okay, this is useless, this is hopeless. Our growth model in the past has worked through devaluation, it's worked through demand stimulus. These are 2 things we cannot do anymore because of the German veto. We're done. We're threatening to leave the euro. And that is, I think, much worse than any Greek scenario, because means the end of the Eurozone, right? I mean, that's something that would make a lot of Germans a lot poorer. So solidarity now that doesn't look like too high a price to avoid this scenario. The positive story, of course, is that in a world of what our colleagues at George Temin and George Washington, Abe Newman and Henry Farrell, call weaponized interdependence, where you have a guy in the White House called Donald Trump, who's willing to use the dollar as a strategic tool to use financial sanctions. This is something the EU over time will want to do as well in a kind of geopolitical system with China and the US. If you have a euro, that's an international reserve asset, you can use this to get certain concessions, whether it's Iran nuclear weapons, whether it's Russia's rearmament, or its threats on the East. So and a euro bond or a common asset is a very attractive financial asset, and would make that step for the euro to rival the dollar or also on, would bring that a lot closer. The same with common deposit insurance as the last kind of bit of banking union, right? It would turn Europe into a positive story, right? Europe is there to guarantee your savings. It doesn't have to be always a negative story where the Europe is the kind of place that imposes austerity and structural reform. And so I think it could change the narrative for Southern Europe as well.
Great, we have a couple more questions. So let me read them out, and one maybe with a kind of a counter view here, and along the kind of theme that you mentioned earlier of kind of the Northern Saints and Southern Sinners. Question from Geert van Brandt, and the question is, Italy, Spain, and France were very lax about reducing the risk of COVID-19. Another example of irresponsible behavior for which, again, they demand an unconditional bailout by the North. And he says, solidarity goes both ways. It requires accountability on both sides, right? So I'm just gonna collect a couple of these questions and we can kind of take them together. We have another 15 minutes on this session. Question 2 by Elena Balabani, which says that even though some European countries are not as heavily affected by the virus now, they will suffer consequences from a complete disruption of another country's economy. do you think that this could encourage in the future the potential of a federal fiscal authority? Okay, so this is coming at the same issue of kind of European institutions, European attitudes in a couple of different ways. Did you guys want to respond to this, or shall I kind of go ahead with the additional questions? Yeah.
These are good questions, Praveen. Very good questions. I'll if you don't mind, Matthias, I'll take a crack at and please add whatever you feel. True that I started by saying that there were pre-existing vulnerabilities in Italy and Spain. Let there be no doubt about that. I mean, why the market took issue, particularly with Italy and Spain, it was not random. And probably not even just because it hit so severely COVID-19, but also because they were vulnerable. Some of the cleanup of the balance sheets of the banks in Italy was not done. Some of the large deficits in Spain, they're there. You see it in the size of the fiscal deficit and their inability to print primary surpluses for many, many years in a row. So it was not random that the market picked the assets in Italy and Spain and sold them off as they were de-risking, more so than in other countries. So this is true. This is true. That's part of the story, right? You need sort of responsible policies and the reforms so you can grow and grow faster out of this crisis. So I think that's a fair point. That's a fair point. Now, it is true that the shock is symmetric. It is true that, if you think of designing a shock that is pan-European and a shock that is not your own making, really, this is it, right? So this is the moment if you really want to show solidarity. So 100% on the point that Matthias sort of argued before. The second question, federal fiscal, here is where we're seeing that Europe could have done more out of the sovereign debt crisis and has not really done enough. Matthias pointed out to the common deposit insurance. They tried to complete banking insurance. They could not. They tried to move towards more of a fiscal, a proper fiscal budget, and even better, a fiscal authority and a European treasury that can issue European bonds, which is then the bonds that the ECB can buy. And the bonds that globally can buy can actually be sort of a counterpart to the US treasuries, right? Globally. Mm-hmm. So you have another global asset to provide global liquidity and global swap lines. Absolutely. So whether we're going to head more that way and whether this crisis will speed or slow that process, it is a make or break moment. I think so. I agree with Matthias. If they don't handle this well, with all the populist and political fragmentation, it can go to the wrong equilibrium.
Matthias, what are your thoughts on the potential for a federal fiscal authority?
Yeah, quickly. Hi, Eliana. Hope all is well. She's one of my students last semester. Quickly to Geert's point, I would say again, that you're not wrong. That being said, there was a lot of northern glee about the Italians having to follow rules. Same with Spaniards and so on, and the stereotypes came back. I think the Italians have shown quite some resilience in this, and they've actually been quite surprisingly so, rule-abiding and staying at home and so on. Right? To Eliana's question, it is striking that actually Portugal and Greece have had relatively mild COVID crises so far, right? But they heavily depend on their neighboring countries. So they will get affected. Their economic story will be just as dramatic because, as Antonio said in the very beginning, nobody's going to book their holidays to Spain and Italy for the summer, let alone maybe for the fall or winter. But I imagine they're going to just get knocked by this just as much, right? Nobody is planning summer holidays right now. Whether this is going to lead to my sense is what's going to happen is they're going to go with some sort of stricter version of Antonio's proposal, and they're going to commit to talking about a fiscal authority in the future, the same with Eurobonds. And there's going to be some sort of like intergovernmental conference that will be set up to deal with this.
Excellent. So we're getting several more questions coming in. So let me try and group these together in some way. Let me just first say that there's one more kind of narrowly European question. There's some questions about Europe and China in this context, and questions about Brexit as well. So let me just kind of quickly, if you have any reactions, and I'd ask for your brief responses on the kind of the European question, which is from John Graham, and he asks, given the dramatic impact of the pandemic on Italy's economy, will the doom loop scenario play out in that country? So this is a quick response from either of you, and then we can move on to kind of the China and the Brexit questions.
Yes, so the doom loop, I suppose it refers to the fact that you have large amount of debts that is held by the banks. The banks are weak, so they can extend credit, and therefore the sovereign does even worse, which then makes the banks even worse because they're holding a lot of public debt and so on. This is the so-called sovereign sort of doom loop between the financial sector and banks. It is there, it is an issue. The fact that the ECB now, so two responses. The ECB is acting, and is acting at a very different level than it did in 2010, 2012, okay? Keeping matters contained. That is a big help. Second, the banks, even in Italy, the banks have way more capital and liquidity than they had in the previous crisis, okay? So I think the situation is, from the financial side, is a bit different. And if this is handled well, it doesn't have to end up badly. But the problems that they had before of weak banks, and especially the medium, small size that need to be merged, some of them liquidated and some of them just boost the capital, they will be there and more pronounced. So quick answer, probably not necessarily, but the problems that were there before this shock have to be addressed in the banking sector in Italy, no doubt.
Excellent. Let me move on to some kind of the broader questions that go a little bit beyond Europe, but clearly in this context. So there was a question that came in through email before we began, and that's been seconded by Alina Hoffman today, which is a question about how various countries have kind of resorted to nationalist type policies in terms of kind of the medical supply chain, right? So the example that was provided to us is, Germany's decided to halt its export of masks, and other countries have done similar things. And the question is it fair to say, quote unquote now, that the current model of globalization or globalism has taken a hit, right? And so do you guys see that in the way that countries have reacted, European countries, countries in the rest of the world, in terms of kind of, nationalist policies, trying to conserve supplies for themselves and maybe go competitively after common sources of supply in the rest of the world, rather than acting in some organized manner to kind of, best things for everybody kind of thing? Do you see that this kind of, this reveals the weaknesses of the system as it currently stands, and the kind of, this model of globalization and us all moving forward together as one global community, that this takes a bit of a hit? Matthias, you might want to go with that, and then,
Yeah, I must say, Praveen, I was kind of hoping you would answer this, but I'll talk about the European context. So I think the EU was very slow in responding initially. So we're talking initially, we're not really talking about 5 weeks ago, where immediately, in classic EU fashion, there was resistance to closing borders, right? Because of its kind of commitment to the four freedoms, which seemed naive at best, if you look at it now, because if you want to contain something, shutting down a border is fairly effective. And there also were all kinds of unilateral actions. Germany, France suddenly banned medical equipment exports. And so the EU had to respond very quickly to say, listen, you cannot do this within the single market. What we will do is have a kind of export ban for medical equipment to the rest of the world, to the non-single market countries. But of course, the collateral damage immediately there was to the accession countries of the Western Balkans, Serbia, Turkey, and so on. So I think what's worrisome, and there is a question of on China as well there, and I can tie that in here, is that the Chinese have stepped in this kind of vacuum, right? I mean, there was kind of a dramatic press conference by the Serbian president, Vucic, who said, European solidarity is a myth. For 20, 30 years, they've been lecturing us on democracy, on institutional reform, on economic reform. And now when it comes down to, us needing them, we cannot even buy medical supplies, ventilators, masks, right? Things like this. And so he said, I'm going to call my brother Xi Jinping in Beijing, and he's going to really help. And so what is kind of striking, and I hear this from our Italian colleagues in Bologna especially, is that they're very good, Russia, China, and Cuba, at propaganda, right? At the kind of small things they've done, a few airplanes of medical help, some Cuban doctors, some Russian supplies, and some Chinese masks that are landing in Milan and in Rome. While at the same time, there's a massive effort going on from Northern Europe to Southern Europe when it comes from deliveries and all. But Europe actually has a real PR problem here. So that's what worries me as well going forward, right? That it's a lot of Euroscepticism that will come back in Southern Europe if this narrative doesn't get turned around.
Let me quickly say that the current kind of nationalism in the context of kind of hoarding of medical supplies and kind of conserving medical supplies for oneself reminds me a bit of the food shortage crisis that we experienced in 2008, the summer of 2008, where the food prices were spiking, there were shortages everywhere, and the immediate response of many countries was to kind of stop exports. And of course, they were told by various international organizations, economists and so forth to not do that. But those were put in place, they were recriminations, they were just as easily forgotten, and the globalization train marched on from there. So I think people probably find it somewhat understandable in circumstances such as the one we're facing now or that we faced then, that countries act in more of a kind of a nationalist manner, and that the public may well expect them to do so. But now very quickly, because we only have 4 minutes left, and I have two sets of questions. I'm just going to group them in 30-second responses from both of you, if you like. One has to do with Brexit. One question that we got by email earlier: did Brexit just get a second look as a good idea? Question. Similarly, from Francis Crispino, the position of the frugal four at the time of life and death for millions has already effectively broken the European Union. Brexit was only the appetizer. Please comment. So your 30-second comments on these before we move on to the China question.
Matthias,
Antonio, yeah, go ahead.
I think this is an easy
yes
one.
Or no, maybe.
I leave it for you, Matthias.
All right. Yeah, I mean, you could take either view here, it seems to me, right? I mean, on the one hand, Brexit right now, in a moment of COVID-19 pandemic, seems like such a little silly vanity project, right? That are you really going to spend the next 2 years renegotiating this at a time when people are dying and so on? So that's one. On the other hand, I mean, it's almost impossible for a Eurozone member to leave, right? So that those costs are just too enormous, even though it could be tested in the case of Italy. But, you do see the kind of responses I think you see in Eastern Europe are more worrisome, right? It's not completely unthinkable that these forces will lead to Hungarians becoming much more Eurosceptic or Polish citizens. That being said, I mean, they're very pro-Europe still, right? I mean, I would have to see more recent polling on this, but I think it's undeniably so that the EU in Spain and Italy has been put in a very negative light in the last few. The Economist has called the end of Europe every decade in its front pages, and it still seems to survive.
All right. Thank you very much, Matthias. One last question. We only really have 2 minutes left on this. Has to do broadly with China. This is two questions that I'll put together. Question from Nicola Daniel. What role does China's relatively weak performance in helping to curb the crisis, and indeed in taking advantage of the crisis to foster disunity within Europe? How does this influence the prospects for more unified EU action vis-a-vis China in the future? That's question one. And somewhat of a corollary question, but that came in earlier this morning. What's the attitude of EU major state governments towards China escorting young students back? So I was unaware of this fact that the Chinese were escorting young Europeans back, or maybe Chinese back to China, I'm not sure, maybe both directions. But your thoughts on China in this context and European commonality of attitudes in terms of a response?
I would just say one thing very briefly, and I leave the rest for you two that may want to comment. Europe is clearly punching below its weight. If you put together the mighty European Union, you will come there with proper common market and proper common foreign policies, proper common things like an army and so on. and not to mention a common currency in Eurobonds, it will be a completely different ballgame. And the way it will interact with China and the US will be different, right? It's the old joke about, you know, when things get ugly in globally and I need to pull Europe, who do you call, right? Who the heck do you call, right? So this is a good example of that. So we'll see how Europe evolves out of this crisis, whether it's more unity or not. And that is the issue for China. I think that's a fundamental issue. But let me stop here and leave it to the experts on the global issue.
Well, actually, I think we've just run out of time. And Matthias, if you wanted to add something real quick, we could, but I think we're almost out of time here.
Yeah, just on Nicola Daniel's question. Hi, Nicola. It really depends on who will control the narrative on this, right? I mean, China has been very effective in creating this 1+16 or 1+17 group, which basically groups together the Western Balkans countries, Greece and Eastern Europe, with Belt and Road, with now, of course, extra aid and so on. So I mean, they seem to be succeeding so far in sowing some division. But I agree with Antonio. It would be nice to see Europe creating these common instruments, which would make it much more effective in responding to China geopolitically. Inshallah.
Inshallah. Well, thank you very much. Let me thank both of you guys, Antonio and Matthias, for a fantastic set of observations, great conversation. Thank you to all of our participants, and thanks to Johanna Surpalainen, professor who helped organize all of this, and Sean DeHert. Thanks very much. So I think at this we stop and end the meeting. Thank you, guys.
Thanks. Ciao.
Thank you.
Bye.